It is a big week for the country this week, with a vote on the referendum scheduled for Wednesday. What's the feeling like on the ground at the moment, and how's that impacting markets activity right now?
Well, I think it's a seriously high impact event. I can see a further rally of 30% on a yes vote. I think we took 3% of that already. The sense on the ground is no one's counting their chickens. Everybody is a little bit nervous given what happened in 2007 and in 2005 at the last referendum vote. But the polls are indicating a yes vote, and I think that's an optimal outcome for the bourse and for the shilling as well.
What do you see this new constitution as a whole spelling for the country moving forward if it is passed in its current draft form?
Well, I think it's very cathartic. We've had a constitution which was designed for a colonial enterprise when we, at a time under the British Empire, and it really never changed. So it meant whoever controlled the keys to the presidency controlled the keys to the candy store. And really, it was very difficult to tell a kid in a candy store, we got to bring you under control. This is not a good environment to be operating in. So I think there's a sense of closure, political risk being squared off. And I think it will be a very cathartic event for the country as a whole, and will engender a feel-good factor, the likes of which we saw in 2002 and 2003. So I think it's going to have a very high impact.
Well, certainly that feel-good factor doing wonders for business confidence in the country. We saw business confidence hit 114 points in June from 87 points in March. In the meantime, with these prospects looking brighter, Aly Kahn data from Cinnovate has revealed that Kenyan firms spent as much as 20 billion shillings on advertising in the past 6 months, nearly as much as the annual spend for 2008. Good news then, it would seem, for advertising companies moving forward.
A huge news for advertising. It's absolutely gone parabolic. And I think most organizations are understanding the value of brand building, especially in a regional market of over 160 million people. Obviously, the chief beneficiary is going to be Scan Group, who've morphed into from a regional play into a Pan-African advertising group. And post the Ogilvy acquisition and the announcement that they had won the Airtel account for sub-Saharan Africa. So, you would see a positive reaction out of that, but clearly the economy is now firing on many more cylinders than it did last year and the year before.
Well, that's how begins the jostling for brand visibility in a market where retailers are going to be focusing on consumers who are regaining their lost purchasing power. It should be making things a little interesting for Safaricom, which plays in a very competitive space right now. You've mentioned that Scan Group has won that Airtel Africa account. To what extent do you see Safaricom upping ad spend, or is it already pretty visible over on that end?
That's a very interesting question, and I think one of the key benefits that Safaricom have had has been the consistency in the brand, the fact they've managed to embed it in the country's psyche. They stayed green, which is the national colors. The name was Safaricom. It's a Swahili name. It didn't morph into Zain and then all kinds of other names which had no connection with people here. So they've got a lot of brand equity value in there. I can't see them stepping back. I expect them to keep on stepping up the spend. I see them spending quite a bit. I don't see that coming down.
Well, BAT in the meantime is one of the players that has had some advertising restrictions placed on it, but it's still seeing significant interest. That share price rallying for the better part of last week. Friday trading 2% to the good. Its all-time record high was 247 shillings in January 2007. Are we looking at that being in sight again?
Yes, absolutely. BAT, Standard Chartered and Athi River Mining are the standouts on the charts. They're at or near all-time highs, and Co-op Bank as well. And I think the attraction of BAT is the very high running dividend that they've been able to maintain. And they've got a policy of paying out most of their P&L as a dividend. So it's very attractive in an environment where we've seen T-bill rates crash below 2% and the central bank cut 75 basis points. And I think that will continue to keep it attractive. And the core business, I think, is doing pretty well with plus 19% at the half-year mark.
Well, very quickly, Centum really also having a good run over the last couple of days, having added close enough to 7% in 2 trading sessions. The market commentary saying that the 6.41 demand-supply imbalance signals that the pullback is complete. Let's look at some of the support factors there. Is it the general optimism that's about?
No, I think it's partly that, but I think they've really re-engineered and repositioned this business. They've tidied it up, they've cut back in a lot of listed equities, and they've taken a much more aggressive alpha-type position in the real estate market around this region, especially in Juba, Kampala, and in Nairobi, Nyarunda. And I think there is an absolute desire for exposure to the real estate angle, and I think Centum has been very timely and given it to investors. It looks pretty attractive. I think there's another 20% of upside in this counter.